Discipline, investment, and work. That's Grupo México. Good afternoon, everyone. We are Tecnológico de Monterrey, Campus León, and we are presenting you an investment recommendation. Grupo México is a conglomerate service provider that has three main divisions: mining, infrastructure, and transportation. Then their main differentiation is their low business cost production model.
Now, our team has issued a buy recommendation based on a target price of $4.44, a 23.68% upside potential over the closing price of $3.59, the 3rd of November 2022. We support this recommendation based on four main factors: industry, financial strength, valuation, and expected projects and growth potential. Now, the transportation industry has been positively active during recent years, since the industry has grown more than 50%. Now, which means that the industry outlook drives towards a consistent growth rate in coming years and helps Mexico transform into a worldwide merchandise distribution center, according to the Mexican government. Therefore, a more specific observation of the industry is the increasing volume of transported cargo, from 55.6 billion net ton kilometers against the 50.1 billion net ton kilometers in 2020. Now, for the infrastructure industry, during the first 2 months of 2022, the sector recorded a decrease of 1.9%, the same period of the last year, as well as a year-over-year decrease of minus 4.3% and a monthly decrease of minus 0.7%. However, in 2021, the sector recovered to 7.2%, after the stoppage of activities it suffered in 2020 due to the COVID-19 pandemic. It is expected that during 2022, the recovery process of the sector would be compensatory to the results of 2020, since external variables such as globalized inflation, the conflict between Russia and Ukraine, and trade tensions maintain uncertainty. At last, the mining industry has had a consistent increase in the mining metallurgical production, with a slight decrease from 2018 to 2019. However, in 2020, the increase in value of an enlightening 281.5 billion pesos in production, and later in 2021, it skyrocketed to a magnificent 334.8 billion pesos in production. Moreover, there has been a recent new driver which impacts the copper demand, which is electric vehicles, which consume 2.5 times more copper per car. Lastly, among its competitors, Grupo México has a clear competitive advantage in its vertical backward integrated supply chain that supports and contributes to its main core business, the mining unit. Therefore, innovation procedures and technologies translate into economies of scale and on a downward shift of the average cost curve.
As a second factor, we consider financial strength of the company. Grupo México has constantly and outstandingly performed in the following financial indicators: revenue growth, net income margins, return on capital and equity, and debt equity ratio. If we talk about revenue, we can see that the mining division takes part of an important part of their income. There are two main drivers that are the price of the copper and the fluctuation of the USD dollars against Mexican pesos that are possibly and inverse correlated to the revenue. More on the other hand, if we talk about profitability, we can see that there are 5 main factors that affect the company based on their capacity of innovation and integration. In addition, to assess the strength of the company, we perform Petrosky and Banish score that tell us that they have a good level of operational efficiency, profitability, and source of funds. On the further, we can see that they have a good level of leverage thanks to the construction of the debt, and this one can be shown by their liquidity ratios and their credit ratios endorsed by the Alman score.
The shareholders' composition. Grupo México, the purpose of this year was to increase the payment of dividends, and this was accomplished, as you can see in the graph. Moreover, with a value of 21.52%, and the return over equity shows a value that is really attractive for the investors. For the peer comparison, Grupo México stands out on its debt over equity, as it has reduced its debt since 2019. Also, this value stands below the sector average. The net operating margin and the net income margin and the net operating margin has increased over the last 5 years. And also, the revenue growth has increased from 2% to 35% over the last years. The capital structure, the ratio debt over EBITDA has reduced over the last 5 years, and this shows performance of Grupo México really attractive. Also, The investment in capex has shown that this has a recovery over the last 3 years. We show the good performance of Grupo Mexico, and we show that Grupo Mexico will continue growing, and it will give good profitability to the investors.
We reset our buy recommendation with a lowest valuation consisting of 100% DCF model and an exchange rate of $19.62. As you can see in the models, each model yields a target price higher than the current share price, which indicates that the market is undervaluing the future growth potential of Grupo Mexico. For our DCF model, we arrived to a 1-year target price of $4.44, considering a WACC of 14.26, a growth rate of 2.6, and we are proposing a conservative terminal growth rate of 2%.
Our $4.4 valuation is most sensitive to increases in WACC and cost of goods sold and decreases in net revenues and in mineral prices. However, those risks are mitigated by the strong cash flow generation of the group, the strong cost and efficiency policy, and our conservative equity risk premium.
For our Monte Carlo simulation, we incorporated to the model a bull-bear case analysis. In a bull case, we found 25 probability that the price going to high to 4.53, and in a bear case, we found that the price going to fall to 4.26.
To support our initial model, we performed a relative valuation with different companies for the 4 continents, and this gave us a target price of $4.27.
In addition to our scenario analysis, we perform a geometric Brownian motion to simulate 10,000 price paths. The resulting price paths corroborates our buy position. To confirm our DCF valuation, we there consider a dividend discount model valuation across 3 different scenarios, including a base case that generates a $4.59 valuation. While there are many risks that could impact our valuation, we are going to focus on the 4 most impactful ones. Copper plays a key role in global building constructions and in technological and manufacturing industries. That being said, a falling GDP growth rate would directly impact the price and demand for copper. However, we expect Grupo Mexico to mitigate this risk with its robust pipeline of international robust projects. Then we identify the risk related with China. China currently consumes 52% of the total copper products globally. China's zero-COVID policy in an already slowing global economy has continued adding uncertainty to the global copper markets. However, Grupo Mexico mitigates this risk operating in different markets and selling in various regions, of which Asia only represents 15%.
In the fluctuations of exchange rate, due to the flexible exchange rate regime adopted by Mexico, the Mexican pesos have a notable fluctuation against United Dollars. In terms of mitigation, Grupo Mexico has a natural hedge that is other sales are in dollars, and the fluctuation in interest rates is related with the liability of the company, and some mitigation structures are buying some derivatives like interest rate swaps. In terms of ESG, we identify some priorities that is GHG emissions, the employee health and safety, and ethics and integrity. In comparison to these competitors, Grupo Mexico has performed well among the industry in the most important ESG evaluations. Their investments on ODS have helped the business to scale in the position of elite.
In overview, based on our previous analysis of the 4 main factors involved in the valuation of Grupo Mexico, our team issues a buy recommendation based on a target price of $4.44.
This was Tecnológico de Monterrey, Campus León. Thank you for your attention, and we are ready for your questions.
Grupo Mexico has a strong, robust pipeline of international projects and is well positioned to face that high demand that is expected to grow in the future years. The copper production of Grupo Mexico is expected to grow 75% up to 2029 by 9 projects, of which more than half has already been approved by the board of directors.
If I can complement that question, Grupo Mexico, in differentiation of the other mining companies, has a diversified portfolio and also a strong financial position. So this allowed Grupo Mexico to invest in other parts and like recover what for example the uncertainty of the industry, right? And right now the infrastructure and the transportation part might be low, but this year has had an important participation in the company. So I will say that we will classify which company to sell and buy, not only because of the industry, but of their financial strength, their diversified portfolio, and of course their expansion, because they're having a 10-year project of expansion, and they're really reaching high levels of investment.
And also complementing the question that you asked, okay, as you can see here, there's renewable energies which apply to the mining part, the main core of the business of Grupo Mexico. Also, as I mentioned, electric vehicles, which is going to be the best new thing in not only Mexico but in the world. Something renewable, something that takes care of what we have right now. So, and with all of these industries going to renewable energies, I think this type of business will grow from this year to future years. So, I think that's.
Hi. You have a buy recommendation on Grupo Mexico, and I think that the correlation between the Grupo Mexico and the global and the local economy, I think that is very high. We did see that in when the pandemic started in March 2020, and what happened with the price stock of Grupo Mexico. So, but on your buy recommendation, do you think that a potential global recession is something that you have to consider? And the other thing is that you were mentioning the influence in China. Are you seeing that as a potential risk or a potential opportunity for Grupo Mexico?
Well, to answer to the second question, it's a risk, the China scenario, because its COVID scenario of zero policy is lowering the real estate sector, which demands a lot of copper minerals and other minerals. So it will lower the global demand of copper in the whole world. However, Grupo Mexico will mitigates this risk by diversifying its operations, of which Asia only represents 50% of total sales. However, the China demand of copper is highly correlated with the worldwide global market.
And to complement this answer, we have seen that, well, of course, we have taken the recession as a potential risk. And as I mentioned, this recommendation is in the long term. Why? Because we see that with the COVID, many people got scared and they sold their actions. And probably if they haven't sold it, or if they have bought it when they were really low, they have won a lot of pesos right now, because we see those things as an opportunity to growth and to continue investing.
Okay. Two questions. First, do you think that Grupo Mexico must to make some change in the corporate governance?
I think Grupo Mexico is really the let's say the team that they already have in the corporate governance is working good. As we mentioned, they support for projects that, well, with the financial strength, they're pushing for more projects to invest. So that's the mindset of Grupo Mexico. So I think because they have all this idea, if they make a change, will make some we'll say doubts. So I'll say the team that they already have is good.
And just to complement the question, as you can see in their report, since 2018, I think it was the last time they have corruption in the company. There were 9 cases, either 8 or 9 cases of corruption. However, in 2019, 2020, and so on, they didn't have any case of corruption, either in their board of directors, their general assembly, and their executive management. So I think right now they're in a good place. They're expanding. They're merging with other companies. They're taking good decisions. They're taking good decisions to cover their good structure in the sector and in Mexico.
Some words about how do you select the free cash model, discount model, or the other dividend cash discount model for the valuation? How? Why?
As a team, we choose the DCF model using the terminal growth. As I mentioned, it's a 2% conservative, and due to the report OCDE, there is between 2.1 to 2.5, and the with the MI is about 1.8, 1.9, so we get an average, so we choose 2% for terminal growth. And in the WACC, we choose 14.9, and we are considering the risk-free of the 10-year benchmark.
Okay.